just to get started, Brandon Van Cleve, president here at Pine Cove Consulting. I'm based in Bozeman, Montana. We're also going to have Devin Hoynes with PayneWest Insurance is going to speak after me, and then we'll have Nicholas Kramer come on from Sophos Security to talk about how all this stuff merges together. So just a quick rundown of the agenda. I'll give you a quick intro of kind of why we're here, who Pine Cove is. Kick it right to Devin. He's going to talk about the cyber insurance side and what they're seeing. And then Nicholas will wrap it up. Then we'll do questions at the end. So if you have questions, you can pop them into the chat or question section there on the WebEx or the GoToWebinar. And so drop those in anytime. We'll make sure we answer those at the end. But you feel free to put those in anytime. So kind of before I get into the why Pine Cove piece, or maybe I'll start with that. So Pine Cove Consulting, for those of you on the call that don't know who we are, we're founded in 1993. We currently support about 25,000 users a day, and really specializing in complex problems. So cybersecurity is one of those things. We have a lot of different components to our business, but really we try to solve organizational issues with technology. So that's a wide array of solutions that we provide. And we can talk to you about a number of those things. Today we're talking about cyber policies and cybersecurity and how those two mix. And we'd love to talk to you about that in the future if there's ever a need. So kind of talking about the why we have PayneWest on the call, we have Sophos on the call, and we have Pine Cove. One initiative that I've been passionate about over the past couple of years is bridging the gap between insurance companies that are providing cyber coverage and the actual companies providing cyber solutions and trying to increase the cybersecurity posture of organizations. I felt like we were telling a very similar story. We're not in competition. I think when cyber insurance first came out, there was this feeling of, well, you're either doing cyber insurance or you're putting in systems to prevent breaches. Well, as people that understand this industry and how scary it is, it's a matter of when, not if. So we believe that you need to look at this in conjunction. We need to look at cyber policies if something were to happen to you. How are we protected? What's protected? But what I've been passionate about and talking with Devin, and Devin, we're a customer of PayneWest. They're a great partner of ours, trying to strategize how we can clean up our message to our customers. We have similar customers and we're talking about the same things. We need to be able to leverage each other and be able to look at organizations that are doing more to protect themselves. How does that positively affect their cyber policies? And I think that's Devin's been awesome to work with on that, and we're strategizing frequently on how we can better clean up our message and really give credit to the people that are doing their due diligence to protect their assets. So that's kind of why we're here and why I'm bringing these two entities together, is we need to start addressing this issue from multiple angles. So yeah, from there, that's my side. I'll kick it over to Devin, and really appreciate everyone that attended.
All right, thank you, Brandon. I'll get my screen shared here and we'll get going. Is that working on your side, Brandon? Are we seeing that?
Yep, I got it.
Okay, perfect. Well, thanks everybody. Thanks for the introduction, Brandon. My name is Devin Hoynes with PayneWest Insurance. I'm a sales executive here, licensed Montana consultant on the insurance side of things. Been with PayneWest for 12 years. We are a Marsh McLennan owned agency, and Brandon brought me here today, like he just spoke on, to kind of give an update on the cyber marketplace. A lot of you on the call are probably already familiar with kind of the trends we're starting to see in the cyber marketplace, but just wanted to kind of go through it and back it up with some statistics and talk through some of the challenges we're seeing and why it's really important for agents to and brokers of yours to be partners really with your vendors and cybersecurity professionals, because I think it's going to go a long way in this current marketplace. So I'm gonna get going here. You can still see that screen, can't you, Brandon?
I can. Yep, you're
Okay.
good to go.
Thank you. Sorry about that. Okay, so trend-wise, there's a lot of different factors when it goes to cyber, a lot of different insuring agreements when we go through policies, but the trend we're really seeing in the marketplace right now is being dominated in the news is ransomware. Really over the last 24 months, especially, we've seen a huge uptick in ransomware events, ransomware claims from an insurance standpoint. This chart here just shows you a little bit of the magnitude of that. Just over the last, since Q1 of 2020, the average downtime from a ransomware attack was about 16 days. Fast forward to Q1 of 2021, it's up about 44% already, up to 23 days. The more glaring issue with that is the cases of ransomware attacks that are resulting in data exfiltration as well. Q1 2020, only about 22% of cases, all the way up to 77% at the end of Q1 2021. So the thing about ransomware that's getting cyber carriers, nervous, obviously, and us as agents and you as customers nervous, is the amount of payments that are starting to be paid and starting to be demanded. Our average payment across our Marsh Global Enterprise is $800,000 in the average ransom payments. Obviously, there have been some big ones out there. We've seen the news with the Colonial Pipeline and all of that this year, but the highest one paid to date for us is $40 million. So obviously, the space is crazy right now in the way things are going. So just outlining this with some numbers, I think helps put it in perspective. So just overall, from a cyber insurance marketplace, what we're dealing with as agents and brokers when we go to work on behalf of our clients is we need to go talk to underwriters about what we're looking at from pricing, what we're looking at from coverage. And all these red up and down arrows you see on the screen just really add up to being a real ugly picture for the marketplace. So let's talk about rates a little bit. A lot of you have probably already seen this, but average premium increases back to the end of last year, we were looking at about a 17% increase on cyber premiums. Fast forward to the end of May of this year, all the way up to 46% average increase in premium. So pretty tremendous changes there over just a few months. With that, it even gets worse. Prices are going up, but carriers are unwilling to offer the same type of coverages. Their carriers, maybe they were offering $5 million in cyber limits a year before. Now they might be only willing to offer $1 million or $2 million. And on top of that, they say, hey, we want you, Mr. Customer, Mrs. Customer, to take on more retention, take on more deductible, to self-insure some of these exposures, just because of the uptick we're seeing in claims. So from a future expectation standpoint, we don't really see this slowing down anytime soon. We're anticipating increases, likely to continue all the way up to 50% or more from an average standpoint. We're not seeing that on all clients, but it's starting to trend that way. From a claim standpoint, we talked about it. Frequency's up, severity's up. One real disturbing thing we've seen with a number of claims this year that we deal with is the number of claims and I know I'm just focusing on ransomware, but that's where we're seeing the majority of our claims. We're seeing a number of claims on these ransomware attacks where these bad actors are getting into our customer systems and they're actually finding their insurance policies and their insurance folders and finding out what kind of cyber extortion limits they carry, et cetera. And then they know what to negotiate with when they start to ask for payment. When somebody's system's been locked down and they're not going to release their data. So pretty disturbing to hear that, but it is something that's real and something that we're seeing. From an underwriting standpoint, and something you're probably dealing with as clients when you work with your agents and brokers on your cyber programs, you're getting requests for a lot more information, a lot bigger applications than maybe you were 2 or 3 years ago. In the past, 2 or 3 years ago, you might get an application for cyber and it'd be a 1-pager or a 2-pager with some kind of basic information on your security and your protocols and what you do around cyber risk. We're seeing applications 5, 10 pages now with a lot of details, and carriers are a lot less flexible on their terms. It's kind of like a take it or leave it mentality. So, really been a challenge in the marketplace that we're seeing. Here's a chart here that, and this is for Marsh clients, just showing it just shows you the trend of what we're seeing from a pricing standpoint, just over a period of 12 months from May of 20 to May of 21. So pretty staggering when you see it on a graph of the 46% increase. So what factors are, what factors are underwriters looking at? What are they asking for? A lot of it's going to be circled around multi-factor authentication, endpoint detection and response. And I'm by no means any expert on these terms. I think Brandon and his team and Sophos can get into details on these or speak obviously more clearly on what these are. But those top two you see on that screen there are the top two things we're seeing on every single one of our renewals, whether it's a large multi-million-dollar type account or it's a more smaller, maybe a $5,000, $10,000 premium account. Doesn't matter. We're seeing accounts or underwriters say, hey, we want to make sure we have multi-factor authentication for offsite access and some of these other areas. And we've even got to the point with a number of our carriers that are basically saying, if you don't have this in place by the next 12 months, we're just not going to be able to offer terms to you. So that's something that's real in the marketplace that we're seeing and dealing with every day. And we have a lot of clients scrambling to put some of these factors in place to improve their security posture. So this slide's more for what we're looking at as agents, and I think this kind of wraps together why we're all here today. As agents and brokers for our clients, our goals, knowing that cybersecurity is probably one of the biggest exposures that all of our clients face in today's world, are to obviously keep pricing as reasonable as possible and minimize increases, keep limits in place, keep deductibles in place. But we're running into big challenges there just because this market is moving so quickly. I think Brandon hit it perfectly when he talked at the beginning is we need to come together in partnership. And I just encourage you when you're working with your agents and brokers to lean on your vendors, to lean on your cybersecurity experts and your IT staff, et cetera, to put together the best picture for your agent and for the underwriters when they're looking at your program so that we can structure programs effectively for you. And so that we can give a good view of what you're doing to help mitigate the exposure that exists out there from a cyber standpoint. Doing that and partnering with those vendors really helps your broker and helps your underwriter in being able to give you the best products and opening up the marketplace so that you can have the best terms in the event that something does happen and you do have a cyber exposure that pops up and could ultimately cost you some claims dollars. So that's just a high level overview. Again, it's probably a repeat on a lot of things you're already hearing out there from your agents and brokers, but I just wanted to kind of give you some numbers and statistics and show you what we're seeing from our side of things. I'm going to kick it over to Nicholas Kramer. He's the director of global cyber risk for Sophos, and he can get into some more details of what they're doing and what they're working through and how they can help. We will have some questions that, or we have a section at the end where we can answer some questions if you have anything for me. So go ahead, Nicholas. Thank you.
Thanks, Devin. I hope everybody can hear me okay. I'll defer to my other fellow panelists to let me know if you can't. But good afternoon, good morning, good evening, wherever you're at. Thanks for letting me speak to you here for a little bit this afternoon, my afternoon, I should say. As Devin indicated, I'm with Sophos, Senior Director, Global Cyber Risk Partnership. So effectively what that means is I work with both the strategy and the relationship execution side of the business specific to cyber insurance. This also can mean, outside counsel if we start getting into incident response and so those sort of things. But generally speaking, it's really cyber insurance oriented. Been doing this for about 16 years. And relatively new at Sophos, but it's much of the same, really, right? So one of the things I always like to just start off with is why cyber insurance is important in the first place. At Sophos, we get a mix, right? We get a fair amount of folks that do have policies, standalone, perhaps some sort of a rider, You know, and then we have folks that don't have any, right? And so just kind of getting back to the basics, I think, is always an important thing. So there's really kind of three core areas where we look to kind of validate the value proposition. You know, cyber insurance, which is also called cyber liability insurance, you know, broadly is about protecting you from the impact of cybercrime, right? One of the key value props is a financial value prop, right? So the insurance is going to cover the actual cost of a cyber incident, right? Now, I always give the caveat, you know, cyber insurance is not a replacement for cybersecurity, right? The two are supposed to be used in conjunction with one another as part of an overall cyber security program. So, you know, one of the benefits though is clearly operational, right? So these cyber insurance carriers, right, they've built networks of, you know, vendors. They've built professionals that have gone through, you know, the song and dance many times. And so for some folks that don't have those relationships with, let's say, you know, outside legal counsel specializing in incident response, or a PR firm, or you know, let's say even the incident response team, right? The investigators that are going to go and uh, understand where the impact, where the threat happened, and neutralizing it, all of that sort of stuff. The insurance company can really help direct the traffic, right? So there's going to be that operational benefit as well to ensure that, you know, you are getting returned back to pre-event status. Okay, peace of mind is certainly there, right? Just like with any insurance product, you know, part of this is about having that peace of mind, knowing that you're going to have some help, some coverage in the event that things do go wrong. So, you know, again, collectively, this is not an excuse for saying, hey, I've got cyber insurance, I don't need, you know, cyber security. You know, it's meant to be used in conjunction with. As Devin said, you know, right now what we're really seeing across the industry very broadly is that ransomware is just driving the activity pretty much everywhere, right? So these claims can be triggered by a whole wide range of incidents. So certainly it's not just about ransomware, but you know, that's really the big one. The four kind of prevailing common threat areas, and this is from a group called Net Diligence, which works across carriers, across networks, right? So they're compiling data kind of industry-wide in this annual cyber claims study. They just published a new one, but this is 2020's data. And you'll see that the top four threats are ransomware, social engineering, hackers, and business email compromise. And often, you know, you'll find that you know, building up to a ransomware event, there was social engineering going on, right? There were obviously hackers in the network. You know, your Office 365 may have been compromised. I've personally experienced working through a deal where the hackers actually had a copy of the cyber policy because their Office 365 had been hosed. Somebody had gained access to some credentials, and so, you know, the whole while they're communicating about the actual event, the hackers are just watching them talk about it. They've got a copy of their cyber policy, so they know exactly how much they can ask for in that ransom. And it, you know, it was really not a great situation for the customer to be in. So again, these are not mutually exclusive by any means, but these are just some of the top ones. You know, I think we're likely to see a similar pattern in this year's upcoming claim study. So cyber insurance covers costs, like I said, typically incurred as the result of a cyber attack. And while the policies can vary wildly, which is, you know, where it's important to work with a broker, you know, like Devin's team, that can help you understand all of these nuances. But generally speaking, you know, the main kind of coverage categories are going to be, you know, covering the forensic analysis to identify the attack source, you know, evaluate and analyze the traffic, you know, where did they move? Where did they go? Are we sure that, you know, are we sure that this location is secure? Are we sure that this endpoint is secure? Those types of things. The ransom demands and the cost to handle those negotiations. So, you know, working with those threat actors is really kind of a science in and of itself. You know, the cost to regain access, restore data, the legal costs, public relations costs. If you do end up having consumer data in this, let's say, you know, in your organization, right? Let's say a file server or something like that, and you'd had personally identifiable information, and you can't prove that the threat actors didn't take it or exfil it, you're likely going to run into notification costs, right? So notifying people that their data was taken, notifying regulators, and then ultimately providing some sort of credit monitoring or identity protection, right? So when sourcing policies and you're comparing those costs, it's worth noting that the cost of business interruption, such as let's say loss of income or network downtime due to the cyber attack, are included in some policies, but not others, right? So that can be a coverage form in and of itself for the business interruption, specifically network interruption. So it's important to, like I said, work with a broker that's going to help you understand those nuances. Every business is going to be a little bit different in terms of their need. Another key distinction here is kind of first party, third party. So first party coverages are typically going to be those direct categories associated with you being able to respond to that event, right? So everything you see up here, right, those are all going to be first party coverages. Generally, you'll see sublimits on those, right? So they don't roll up to the master limit of the policy. Whereas a third party coverage, third party coverages are really about defending oneself, right? So think lawsuits, think regulator fees, that sort of thing, right? Class actions. And those generally are going to have, separate limit. So, important to definitely understand how the policy works with respect to your third party and first party coverages. So how common is it for organizations to have cyber insurance? We recently commissioned an independent study of 5,000 IT decision makers. This was exclusively for mid-size organizations across 30 countries. And 84% of respondents said that they had cyber insurance, which, most people that I talk to, certainly, folks that are in the world of insurance, think this number is quite high, right? We've seen estimates directly from carriers that show it as low as 40%. But again, these were IT decision makers that we were reaching out with, so it could have been something with who we were reaching out to get this high number. But it did cover a wide variety of industry sectors, so it wasn't really exclusive in that sort of way. So if you look at this another way, right, which is by country, you'll see that there's some consistency to the prevalence of cyber insurance by country. India leading it off, and then Nigeria down at the bottom. But anywhere from a 94 to a 70% spread is quite prevalent, right? This certainly surprised me when I saw these numbers for the first time. Now, gaps in cyber insurance, right? So again, I can't stress how important it is to work with a broker that's going to be able to help you realize, not only determine how much risk you need to transfer and, getting the right type of policy based upon that specific risk, but making sure that there aren't any gaps, okay? So, while 84% of these organizations that we surveyed said that they had it, only 64% said that they had insurance that covers ransomware, right? Which essentially leaves 1 in 5 exposed to the full cost of a ransomware incident. Now, getting the ransomware coverage is a bit of a conversation in and of itself, and we'll talk a little bit about that here in a few moments. But again, the key here is, understand where you may have gaps, because it is possible for gaps to exist. Now, when we look at this by industry, again, we're looking at this survey data here, right? And we'll see that the public sector is really the least likely to have cyber insurance and insurance that's going to cover ransomware, which is concerning, frankly, because, public entities are really one of the top targets for these cyber criminals, because they're some of the least likely to defend themselves, budget issues, sophistication issues, that sort of thing. Education, definitely another kind of concerning one. Local governments. If you look 2-3 years ago, really the drive in ransomware was primarily coming out of those two sectors, right? So we're starting to see it kind of come full service, or full circle rather. But financial services, which, no surprise here, right? They tend to be the one that has the highest level of coverage for general cyber as well as ransomware. In considering that, financial services are some of the most highly regulated and the earliest regulated, really not too big of a surprise to see that specifically. Devin talked about this, right? Cyber attacks are fueling the driving cost of cyber insurance. This is some data that we pulled down from a company called Advisen. They do a lot of like conferences for cyber insurance companies. They do a lot of, they're a media company for cyber insurance. Partner Re, of course, being a big reinsurance company. But they've revealed per this report that the top drivers of new or increased cyber insurance sales, based on, I guess this was 260 brokers and 190 underwriters worldwide. It talks specifically about, the news of these events, right? So the top two things that drive the adoption are reading about it in the news or personally experiencing it, right? Don't think that's too surprising for anyone to hear, right? But certainly with the news of it everywhere, right, it's not surprising to see that that's the #1 factor per these guys driving that. Now, the cost of cyber insurance in terms of what makes up that premium, again, a broker can help you understand this, in much greater detail than we can talk about here today. But I did want to hit on a few kind of high-level points, right? Because each of these factors are going to be, considered when you're going through that underwriting process, right? And each carrier kind of has their own, algorithms, their own secret, formulas to determining, how much each of these is going to be factored when it comes to determining what the premium will be. But it's the same kind of high level things that they're trying to understand, right? So the demographics of the business, size, industry, sector, location, revenue, right? Your potential exposure, and that one's a huge one, right? So the type of volume of sensitive data that you host, do you store it? Do you collect it? Do you process it? Surprisingly, or maybe unsurprisingly for some of you, the insurance companies can do things like run dark web scans, right? To see, as a general kind of, litmus test, does this company practice good cyber hygiene? How much of their information is out in the public domain? How much of it is out on the deep and dark web? So they can do things like that to kind of try to understand what type of risk they're getting into outside of all the questionnaires and stuff that Devin was talking about, right? So that's a huge one. The existing level of cybersecurity, this is becoming a big one right now, right? So the carriers are starting to want to see more and more about, not just what the existing level of cybersecurity is in the organization, but, how high of a priority is it inside the organization? Is this something that, everyone from the board of directors down, is talking about? Do they have a cybersecurity outlook? Are they a cybersecurity oriented business? Certainly if you're trying to get higher limits, certainly trying to get some of the higher limits for the ransomware and that sort of thing, these sort of things are going to be very, very prevalent. Your existing history, that doesn't necessarily have to just mean existing claims, right? Because most of these data breaches are going to be public anyway. You're going to have to report them to state AGs and they get logged there. So again, it's pretty easy for, somebody that is wanting to inquire about your previous history to be able to pull that, as well as some private ways that they have as well. And then last but not least, obviously the policy term, that's going to be a big one to consider when you're determining what the cost of cyber insurance is going to be. Devin mentioned earlier, he referenced, the deductible and the retention. We're starting to see increased deductibles, increased retentions, because the carriers are wanting you to have more skin in the game, right? With this changing landscape. Well, a lot of folks I've realized over the years don't, not even really super familiar what the difference between the two is. And so, just real straightforward here. We've got this example where we've got a $100,000 policy, and you either have a $10,000 deductible or a $10,000 retention, right? So with the deductible, essentially that first 10,000 is cost that you must bear, right? So you're going to have to kick in the first 10,000, and then the insurer is going to kick in the extra 90,000, getting you to the 100,000 total coverage. With the retention policy, that sits outside of the overall limit, meaning you're going to kick in that 10K, but then the insurer kicks in an extra 100K, so you effectively have that full 100K in coverage to use. In the SMB market, it's not uncommon for there to be just a single carrier, right? So, if it's smaller limits, you're likely just going to have one carrier participating. But as you get up into the mid-market and enterprise, the concept of a cyber insurance tower is common, where you will have multiple, carriers that are participating in the risk transfer, funding it along the way. Hey, I'm the primary, I'm the secondary, I'm the tertiary. And so the broker will work, with those carriers to build that tower accordingly. And then if you do have an incident, similarly, the order in which, they fund the risk becomes the order in which they pay out the risk when there is a claim. So interesting little tidbit there. One of the most important things that, I think in my role at Sophos and the types of customers that I'm working with daily is, helping them understand the concept of these insurance panels, right? So I mentioned it in the beginning, and one of the operational benefits of having cyber insurance is that the carrier can help you, right? If you don't have relationships with the PR firm, or if you don't have relationships with an organization that can negotiate with the threat actor and fund a Bitcoin transfer and those sort of things, they can help you out there, right? And so those are called on-panel approvals. So each of these carriers is going to have a group of vendors that they work with, right? And they're going to be called on-panel. And so if you go to them with a claim, what they're going to do is they're going to try to steer you towards that group of, on-panel approved vendors, right? They can, guarantee more, or at least get more comfortable with the concept of the outlook, the result, right? They also have more control over cost and familiarity, contractual terms, that sort of thing. But by no means is this, a rule, right? Many times an insured can advocate to use vendors that they want to use, especially if there's a pre-existing relationship, right? And so, there's benefits to using using vendors that you already have relationships with, right? So I'll give you an example with Sophos. If you're running, Sophos, let's say EDR, Intercept X, or something like that across part of your network, there's going to be an advantage to using Sophos for the incident response. It's an offering we call rapid response. And the reason for that is because we use our own tools. Our team is using Sophos to actually conduct the IR. And if Sophos was already running on part of the network, there's going to be valuable data there for us to mine. And in many cases, and again, I've been doing this for 16 years, in many cases, I've seen what we're able to do, on orders of magnitude quicker than what it would look like if you were trying to go through the panel vendor, right? Because many times there, they have to deploy separately. They have to really kind of understand things, and there's just more legwork to do up front, whereas we can get into things and get moving quickly. So what I like to leave people with here on this slide is just, again, understanding that the carrier will try to get you to work with who they want you to work with, right? But you have an ability to advocate for yourself. You have an ability to say, hey, look, I've got a relationship over here, maybe with this law firm, maybe with this IR company, and I'd like to use them. And then, at Sophos, of course, we have a whole team dedicated to making that work, making that process easy for you, so we can help get that supported. So when you're selecting a cyber insurance policy, it's also important to make sure that level of coverage is right for the organization, the risk transfer is right? So you'll need to be able to recover successfully to keep your business afloat if you experience a cyber attack. At the same time, minimizing the impact downstream to what your subsequent premium will do, right? So bear in mind, when you're getting a quote that covers the cost from recovering a cyber attack, the average ransomware recovery, and I know Devin spoke to some of this, right? And I think we're pretty close on these numbers. We're getting ours from a little bit of a different source, but they more than doubled from 19 to 20, going from 760,000 to 1.58 million, right? So it depends on where you're looking, who you're talking to, right? Numbers will be a little bit different here, but generally speaking, what we're seeing is crazy growth, right? In this case, doubling. So the restoration is also a big cost here, right? And so this is where a company like Pine Cove comes in, right? It's really critical to have those relationships with an organization that has the technical and IT know-how to be able to go and kind of go beyond where a company like Sophos would go, right? We're an endpoint company. We are a cybersecurity company. We work very nicely with an IT consulting company, right? Because they can help implement those solutions at a level that oftentimes we cannot, right? So again, Understanding what that would need to look like and who would need to do that up front is key. Some people refer to this as part of your incident response plan. If you don't have one of those, we have one I can link to here at the end. I'm sure Pine Cove has some great resources there as well. Even PayneWest and Devon, I'm sure they have some resources there as well, but certainly you want to look into that if it's not already on your radar. This is an example of just some cost here from a Baltimore County Public Schools ransomware attack back in 2020, right? And so you can see that the total recovery cost far outpaced the limit, right? And again, by no means is this a comprehensive list here. This is just an example, but you can see how they kind of broke it out into initial, like the emergency recovery cost, the larger kind of long-term recovery costs, and then the smaller recovery cost, right? And so when you're looking at it at this level, you really start to understand how impactful these can be. And again, this is where working with a broker really comes in, making sure you have that spot on. So the bad news, we're hinting at there, I think, with Devin's last slide or second to last slide, talking about the current market conditions, right? We are moving into what's called a hard market. I mean, we're in a hard market, right? So historically, cyber insurance has been a soft market. That's characterized by high capacity, meaning lots of carriers are putting lots of coverage out there and premiums are remaining low, right? That's a soft market. But for the first time, really, it started happening a few years ago, but we're kind of fully in it now, right? The market is hardening, right? So it's kind of the inverse of that. We're seeing capacity shrink, and we're seeing the cost of this coverage to go up, right? For the other thing here, right, is that the loss ratio has been rising for 3 consistent years. Up to 72.8% in 2020. And this was per, I think it might have, I don't have it up there. I forget which one this was. This might have been, I'll reference it later if anybody's curious. But again, your loss ratio is essentially, the cost of insurance divided by the total earned premium. So let's say if a company pays $80 in claims for every 160 collected in premiums, that loss ratio would be 50%, right? So that's kind of that benchmark that they're looking at. It's been rising 3 years straight, 72.8% in 2020, right? We're in a hard market. And a number of factors are driving this outside of just the ransomware, right? So, we still have limited loss history. So a lot of insurance companies are investing a lot in AI and machine learning, trying to get better at making judgments and risk, right? So it's still relatively new. The cyber attacks are constantly evolving, right? AV is always going to have a place for there, but the reason why we're seeing EDR, why we're seeing more dynamic protection emerging as next gen is because these cyber attackers are doing that, right? The costs to recover from this are increasing. And then we had the pandemic, right? So it was kind of the perfect storm of things coming together, contributing to where we're at today. So, yes, it's getting harder to get coverage, but the good news is cyber insurance does pay out. I'm going to skip that piece about the public companies here just in the interest of time. But like I said, the good news is that for those that do have cyber insurance, it does pay at the end of the day, right? Now, we'll go through some kind of nuances here, right? But I want to point to a 2020 survey, right, that we did. This asked over 1,700 IT professionals, whose organizations had been hit by ransomware in the last year, and whose cyber insurance covered the ransomware, or the policy was supposed to, whether or not it paid up, right? And 95% said yes. The main costs covered by the insurance across the board by average payout, meaning they paid, did they pay or didn't? Did they pay or didn't they? Were cleanup costs, right? So those were paid in 69% of cases. 44% of the incidents, the insurance paid the ransom, and then in 29%, it paid other costs such as downtime and lost opportunities. Again, that's generally a separate type of coverage, so it's also not super surprising that we see that one last. And coming back to the ransomware payment, the goal for the insurance provider is to get their client up and running as fast as possible and at the lowest cost. So they're going to evaluate their options during that time, talk to the lawyers, talk to the adjuster from the insurance company, the actual company, and determine if paying the ransom is the most cost-effective option, right? Oftentimes it's a group decision, like I said, right? It's going to, you're going to have somebody from the insurance company, an attorney, and the company making that decision, including with the feedback from your response team. So that said, bearing in mind on average, just 65% of data is restored after paying the ransom, and only 8% of victims get all of their data back after paying, right? So even paying that ransom is, in no means a surefire way to get out of, or I should say, to get 100% of your data back. So that being said, I'm going to walk here through just a few minutes on how good cybersecurity can help with cyber insurance, right? And then I'm going to toss it over for a couple minutes to my colleague Sean Whelan, who's the territory manager over there in kind of the Rocky Mountain region, to talk specifically about Sophos. That'll be in just 1 minute here. I want to hit just a couple of things briefly before we jump into that, and then we can get into some questions. So the first thing and foremost thing is, good cybersecurity is going to help you get the coverage in the first place. I mentioned at the beginning that, and Devin referenced this as well, carriers are increasingly looking at what your cybersecurity posture is in order to get that coverage, to maintain the coverage, or certainly get the coverage amounts that you want, right? So advanced protection is really where things are going. Okay, I call it next gen EDR, right? It's no longer just, basic signature-based antivirus tools. Now, those aren't going anywhere. That's certainly better than nothing. But again, because of the changing nature of how the cyber attackers are breaking into networks, next-gen security is really what you need. One that is going to allow the detection and response across endpoints, right? And so that's really what that advanced protection is about. The other thing, MFA, right? So this is probably the easiest and most valuable tool here to implement, right? So first and foremost, if any of the software that you're running in your enterprise stack, whether it be sales-oriented, marketing-oriented, operations, order management, any of it, right? If it has MFA available, turn the MFA on, right? I can't tell you how many of these we do where simple MFA could have prevented the account takeover, right? And so we're starting to even see MFA be a requirement in some cases, and I think that's certainly going to be more and more prevalent, right? The other thing is, having that response plan, right? So there's a difference between an incident response plan and the business continuity readiness plan. Understand the difference and make sure that there's buy-in from the top down, right? That's going to be another key thing that's going to help you getting that policy. We've seen things where costs are going up because next gen is not installed, right? This is definitely happening. It tends to be kind of based on industry or business, but it's certainly potential, right? Another kind of nuance that we're starting to see here is, if you're not maintaining patches, right? When vulnerabilities are published and patches are published, or you're not updating your software, this is another tricky one, right? Hiscox got out of this one. This was in the UK over the summer, but basically they didn't, in the policy language, it says we do not pay any claims, losses, breaches, privacy investigations, or threats due to the use of outdated or unsupported software systems, right? So we're starting to even see that now, and that's another kind of key area where it's like, hey, you got to stay on top of this sort of stuff. Last thing I'll say here is just, every second counts when you get into a cyber event, right? And so having access to the experts, knowing what you're going to go through, knowing, who's going to do what, knowing the number of the adjuster at the insurance, your incident response team, if you have a company like Sophos who offers that, knowing what to do, all of that is going to be key. Practice it. And then, of course, a company like Pine Cove can help you out with this sort of things too, because they do play a crucial role. So that being said, I'm going to come back here in just a moment to wrap things up with our rapid response, but I want to kick it over to Sean for just a couple minutes to talk you through specifically, how Sophos can help with our full, suite of solutions.
Excellent. Thanks, thanks, Nicholas. Thanks, Devin. Nice to chat with everybody. This is Sean Whalen. Like you mentioned, I'm the territory manager for Idaho, Wyoming, Montana. I work directly with Pine Cove. And yeah, I think Nicholas and Devin, they've both done a great job really kind of setting the stage for the state of the insurance industry right now, the importance of having and then managing a policy correctly. I'm going to focus, I guess, a little bit more broadly and then scope it down on how we're actually helping customers secure their network and then ultimately have a healthy relationship with insurance and keeping things sort of as business operational as is possible. So I'm going to assume that there's kind of like a mixed bag just in terms of people's familiarity with Sophos. So I'll go kind of from a broad standpoint and talk a little bit about what we call the adaptive cybersecurity ecosystem, which is kind of a term we use to generally talk about the way that we secure customers, all the way from sort of like our development workflows and how we aggregate threat intelligence up to the products and the services that we actually go into market with and help customers. So first and foremost, if you are evaluating any technology or service from Sophos, we have a platform, a cloud-hosted interface called Sophos Central, where all of our tools are managed from. So any piece of hardware, any piece of software, you can do the administration from this single unified platform. All the licensing for our tool set is modular. You're not buying into some platform that's going to force a bunch of tools on you that you don't need. But if there is an appetite to simplify your IT and security life or really consolidate different tools that you do have, we represent a pretty unique opportunity to do that. So that's everything on the software side, from endpoint security, encryption utilities, hosting, email filtering for your cloud-hosted email provider, be it Office 365 or G Suite. On the hardware side of things, we offer a full suite of network hardware, firewalls, soon be releasing switches. We have access points. And then on the services side of things, we have what we call rapid response, which is the incident response service Nicholas referenced earlier, where you bring us in as the firefighters once you've ultimately been hit with something, as well as managed threat response, which is a tool set for it's a proactive service where we monitor the environment 24/7. Now, all of the telemetry we pull from the tools and the software, as well as the services, get fed into the artificial intelligence, the machine learning that we do on the product side, our labs operation where we're doing our own threat analysis, as well as the security operations itself, the teams that actually monitor our customer estates. So that's sort of the big picture, kind of progressing more specifically to the core products that customers focus on when it's sort of like, how can we protect ourselves and really protect ourselves from breach? It kind of gets categorized for specific things that we're generally talking about. The highest level and sort of I think the best type of prevention that companies can talk to us about in terms of really ensuring that you're preventing any type of breach or security event that you're ultimately needing to go and attempt to get funded or claim a policy against is what we call managed threat response, or MTR. The broader market term would be like managed SOC or managed detection response. And this is where we're providing 24/7 monitoring of the network. The principal point of data collection are the endpoints themselves. So we have a really good understanding of what's happening locally on the systems, but we can widen the scope out to looking at network traffic, looking at other areas, and it provides us a really granular way to monitor your estate for threats. More and more, you're trying to target things earlier in any type of breach cycle during dwell time, when somebody's maybe has persistence on the network but hasn't actually delivered a payload yet. You can stick on that slide. This offers sort of like an outsourced way to really monitor for those types of threats. Intercept X Advanced provides protection from the threats themselves, and we have tools for doing our own forensics and analytics the systems. When we're talking about the software that you could actually install on an endpoint to provide protection from things like ransomware and other types of threats, that's one of the areas where we really shine. We've been a Gartner leader for the past 12 years, and you know, this is sort of like the bare bones of like, you know, what can we do to protect ourselves from ultimately getting hit with something. So we leverage anti-ransomware technology where we can actually roll back encryption events. We leverage machine learning for portable executables we don't have a signature on. And we also provide anti-exploit technology. So the ways hackers will try to exploit software vulnerabilities to either gain persistence or deliver some type of payload. And we can also do, you know, our backstory is in the foundational side of things as well. So we you know, offer a lot of the more traditional techniques around signature detections combined with some of these more behavioral focused ones. And I think the final piece I was going to talk about was MFA and the role that it obviously has. I think both Nicholas and Devin mentioned how important MFA is for underwriters and you know, insurance companies when they are evaluating an organization. And this is something that we can support at various different, you know, points within any type of security program. So Sophos Central, that cloud interface that you use to actually administer the tools, that will be required MFA for users to access. Our ZTNA client, or zero trust network access, provides an MFA workflow for remote users trying to access specific corporate applications. Our firewall can enforce MFA for any remote users just trying to access the network itself. And then if you're starting to move workloads to the cloud, be it Azure, AWS, GCP, the MFA client, or we can identify users that don't have MFA enabled that should, and really start to identify who are some of the overprivileged users accessing some of these resources. So that's sort of the you know, some of the specific ways. Please don't hesitate to follow up with questions, but that, you know, we're helping sort of, you know, shape customer security programs and ultimately put them in the best possible posture to prevent a situation where they're trying to, you know, claim against a breach or you know, something of the like. Yeah, thanks, Nicholas.
Yeah, thanks, Sean. Yeah, so you know, I'll go ahead and leave it with that. The last just quick bit, you know, I know Sean mentioned about rapid response, but if you have interest in that, you know, you can feel free to reach out to, you know, any one of us. You know, we can certainly point you in the right direction. You can reach my team at cyberinsurance@sophos.com. So if you do have any questions specific to us and or cyber insurance, the team is available there. Like I said, rapid response is available. That's an incident response offer. Be happy to help answer any questions. So thanks again for the time. I'll kick it back over to you guys for the questions.
Thank you, guys. Yeah, Brandon here. Also, just to wrap up, and I'll let Jace let us know if there's any questions. And by all means, if you have a question, drop it in the field there. But yeah, to summarize that as a whole, too, just a call to action. Where do I go next? And I don't think there's a wrong answer. Sophos obviously gave you some routes. I think if, as you are going to see, as Devin alluded to, and so did Nicholas, you're going to see increases in your premiums, and those numbers are going to go up. And I think what I have been passionately pushing to find, which PayneWest has done a tremendous job of, is taking into consideration organizations that are doing the work and are protecting themselves above and beyond the typical organization. And that's where I've been frustrated from an advocate for the customer is you take two different organizations, one doing a lot of different protocols, doing MFA, taking the next step from a cyber posture perspective, not getting any credit for that on their coverage. And that's the rub that I've had for a long time. And what I've worked, it's been great working with Devin, as I've watched them and how robust their vetting process has become. So they know the risk they're getting into. And also we can see that credit go to the organizations that are doing the work and putting the protections in place. So I just want to mention that, whether you're starting with Devin or need a second opinion, maybe you've invested in some of these solutions and don't feel that your cyber coverage provider is giving you a discount or any kind of credit for that. I would suggest talking to PayneWest or a company like PayneWest that is doing that, and it is on the kind of the cutting edge of understanding the value there. So, and then obviously talking with Pine Cove, we're here as well to help you understand how we can bolster up your security posture. So when you do go into those conversations with your insurance provider, you know what you're talking about, and you can you know, push back and make sure you're getting the best price for what you deserve. In saying all that, I've talked enough. Jason, is there any questions out there?
No questions came through right now, but if anyone does have any, you can email. The recording will be sent out. It's programmed to send out 24 hours after the webinar finishes, and you can reply to that email with any questions, and I can get it forwarded on to whoever's the best person to answer, or you can always email sales@pinecc.com, and we'll make sure we get your questions answered there too.
All right. Thanks, Jace. Thanks for the panel. That was great. Thanks for coming together and put that on. And appreciate everyone jumping in and joining us for this. And hopefully it was pertaining to some of the things you're looking at. So again, look for the recording, reach out to us anytime, and thanks again for attending. See ya.